Alright, so let's start going over again the YM, the Dow futures, along with the higher time frame. So it's very important to have the time frames like this. And then I'm going to go over maybe something else, but we'll see. Alright, so what we see is that, the market kept going down, down, down until these two L's. L represents low volume. Alright, so over here, you have low volume and low volume, which is basically low volume here and here at what level? I think it's 2285. 22285. So this was around 839, 840, and then you had this rally. Alright, I think this rally had follow through. Okay, so you had a rally, pullback, rally. Now, the first bullish indication, so like how we want to think about this is how Wyckoff basically thought about what he was doing. And if you see in his studies, he's not really giving signals. There's no signals. What he does is he gives indications, not indicators, but indications. And he takes multiple bullish or bearish indications, which allow him to form a judgment about markets. Okay, this is like more of the intuitive, or perhaps the subjective or intuitive style. So the first bullish indication we get is that from this low volume testing, there is a rally, and that rally of 5 bricks, 1, 2, 3, 4, 5, and that rally makes a higher high. And I'll tell you guys, this is probably one of the most important things that I've seen. It's within what is perceived to be a downtrend, seeing a sign of strength and then seeing follow through is what is the most important part of a potential change in trend, because if you take a look at Wyckoff's first study, that's exactly what he did. When he went over his first study, he looked for a strong rally within a downtrend, and what he talked about was observing the low of the rally and seeing how much volume came in from the lows. And then what he said was he's looking for a higher high to be formed. That to him was some type of confirmation. And we see that same principle in the market today, where you have a strong rally, aka sign of strength, with a higher high. Alright, so that is very important. So that occurs, and what you have here is also very important, which means when it made a higher high, the subsequent rally was initiated by high volume. That is important. Okay, so when it made a higher high, whenever you see these rallies, identify where they're coming from. Are they coming from a high volume impulse? Now, why is this high volume impulse important? Well, let me explain why this is so important. Here you see bar, 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 bar. Okay, but what if this bar has high volume? What does that mean? That means that this bar is very likely something like this: up, down, and then up, 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 up. That high volume, I mean, it could be just buying, but I've seen many cases, what it is it's consolidation. So this, when it has high volume, it's actually a supply or demand zone or something like that, or a trading range. Okay? So this is why, if you understand the jump over the creek concept, you'll understand what Evans was talking about when he wanted, some type of trading range and then a breakout. So this high volume is indicative of a range in most cases, okay? And then having follow through in the bars. Now you want to get in on the test of that range for a follow through move up. It may happen, may not happen, but this is nothing more than a test of a range, and that high volume here is indicative of that. Alright. So now, so you had this range form in this high volume area, and then fall through, and then obviously it went up and down and up and down, and it was encountering selling, right? And this was interesting because this looked like it was really bearish. This is the highest volume off of the range high, off of resistance. So now it comes back down. So let me just point that out. Right over here, you had a very high volume brick. It comes back down, and it creates the spring. Okay, that is a spring. That is the spring. The spring. Now, how do you know if it's a spring, if it's gonna work, and all of that? I'm not into like trading a lot of springs and upthrusts, but it requires observing the volume, observing the character of price, observing all of those things, seeing trying to figure that out. And a lot of folks who really know springs and upthrusts, they will tell you that it's more of a stop run. And in this case, like if you were long, they forced you out, took all of your contracts or shares in other markets, and once they basically forced you out using by the same stop that you use, you got stopped out, and they get all the money. They get all of what you own, and then they whoever did this is not random behavior. This is a maneuver. This is a maneuver. I thought maybe this was a spring, but it seems like this was a spring. And this is the issue with springs, because one can say that over here this was also spring. That right there is a spring, right? So which one is the real spring, and will the spring get sprung? I don't know. But the point here is that the bullish indications that we have were found here within this higher high. Now the maneuvers that are employed, they target stops. So everybody's stop is below here. Okay. I mean, most people will keep their stop below there, and this is what they did. They did a spring, and once folks were shaken out, the market rallied. All right. Now, what is this high volume here and here? That, as I've explained in my video yesterday or the day before, is the high volume breakout. So in order for price to go through resistance areas, you will see high volume. Over here, you see that same application of a high volume breakout occur. You see that? You have big volume, high volume, who cares? over here you see that volume come in, and this, many folks will be, who are trading the breakout, will specifically be looking for these high volume breakouts. Alright, and it is apparent, the CM's footprint is apparent when price goes to resistance and thrusts and with high volume and breaks it, pull back on low volume and continuation higher. Now it's at this level, hanging around. Okay, now let's take a look at the higher time frame. So I'm taking a look at the top chart. This chart is getting very, very interesting, and the reason is there's some type of breakout here. Okay, so we'll see if it has follow through and whether this correction is over and the market is ready to make new highs. It is possible, it's very, very possible, because this breakout right there, look at the juice. I can't draw. Try this. Look at that. See that? That's the highest volume today since the 20th. So in about 9 days. About 9 days. So this was enough to take out this resistance area. So now comes the real, is the market ready for a new high? Okay, very, very important. Is the market ready for a new high? I think that is the question. And over here is there's resistance right here. And I think the cause is there, and this correction was very weak. It didn't even go to a measured move down. Now you may say, oh, that means it's going to go down. No, that's not the case. It means someone is continuously buying on the dip. This type of formation within a trading range is very, very bullish. This type of formation looks like a springboard. You see this? When you have a trading range, you'll see the trading range make higher lows like that and then break out. This is one of the most bullish type of it's more bullish than bearish. Okay, so a lot of times when you study ranges, they have a tendency to have two key aspects. Right? Look at the bottom chart. How did this trading range resolve itself? The trading range resolved itself with a spring, right? This type of trading range that resolves itself with a spring is very notable. The second type, or like a prototype for how a trading range resolves itself, is not the spring but the springboard. Alright, so let me talk about this, because I believe this is very, very important, because the question of how trading ranges are resolved is so critical, because if you know what to look for, you know how to play the trading range. So there are a couple of ways trading ranges are resolved, but there are two types that are extremely valuable, in my opinion, that I think traders should look for. And Wyckoff traders, not all of them, but many of them know about this. It's like how are trading ranges resolved. Trading ranges are resolved either in this type of action like that. This is called a spring. And one other method for resolving trading ranges is like this. Which is the springboard. Okay? Both these two prototypes, springboard. Okay, these two prototypes are very beneficial to trade. Okay, there are other ways that, you know, other components that are very important. In both cases, the next question is like, how do you know the trading range is going to hold and all of that? My opinion is once the breakout occurs, first of all, how did the breakout occur? Okay, so whether it's a spring or a springboard, I want to see how the breakout occurred. So I want to see, you know, bang, like a thrust, a breakout bar. Then what's important is the follow through. Okay, so you want two things. One is the breakout, and the second is the follow through. If a breakout does not have follow through, it really is suspect. You know, you have to really think like 2 or 3 times before you play that game. So you want that, you want to see a clean breakout, and you want to see follow through. Alright, which means it has to make more price progress. Now, after the breakout, it might pull back and then do a follow through or whatever. But what you don't want is for a breakout to occur and then immediately go back into the range, because that is what creates the false breakout. You want breakout, you want it to hold even if it's consolidating, and then follow through. Okay? In the end, what matters is how the breakout occurs. Is there follow through or not? And the second thing is how much price progress is made. If this price progress is significant, and by significant, I think it should be at least 50% of the range. Okay, I prefer more, but it really should be more. Actually, should be more. Forget 50%. I want to see more. I want to see good progress, because what that means is that traders are willing to buy at higher prices, making the pullback to this area much more likely to succeed. Much more likely to succeed. Okay, so again, what we covered today was, you know, how the trading ranges break out. How do the trading ranges resolve themselves? One method was the spring. The other was, you know, a lot of people call it the apex or whatever. You know, and this occurs in many ways. Sometimes it's absorption. Well, that's the third way. This right here is a springboard, but the third way would be like it does that. These are 3 methods, 3 prototypes that are very valuable to study to answer the fundamental question of how do trading ranges resolve themselves. Okay, now after the spring, you might have a test of the spring. Okay, or whatever. So these 3 prototypes are very important to study, and I don't know why nobody has like a schematic of this, but hint hint. And the second thing is how it breaks out. Must be on a breakout bar, and then it can do something like this, but there has to be follow through. That's the second thing you want to see in the range. The third thing you want to see is how much price progress it has made. If it has made significant price progress, there's very highly likelihood of a test of the creek, jump over the creek, or whatever you want to call it, or the test of the breakout being successful. Why? Because they're willing to buy higher prices, making a pullback a very good discounted opportunity, or at least it's perceived as some type of, value or something like that. So that's the idea. What you don't want to see is, just a bullshit zone. That's what I call bullshit zone. And pathetic like this. This is a waste of time. There must be a breakout bar. There must be follow through. It must make progress, come back down, and then observe how it made it resolved. Was there a spring? Was there a springboard? Okay, so these are, and I don't like to call them patterns, but that's just the way they are. Okay, alright, so take care. Bye.